Hello, I'm Bryce Noor, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Friday, February 8th, 2013. I'm just back from Brazil, going from hiking in the rainforest to shoveling snow on the frozen tundra. The markets are posting some big swings today, too, in the wake of USDA's February crop reports. Market analyst Paul Bergner joins me with his perspective. Beans took the biggest hit from the market, at least. The USDA report wasn't all that bearish. The agency cut its estimate of 2012 crop carryout by 10 million bushels due to increased crush. That was actually a little more than some of the trade were looking for, though we believed a bigger reduction was justified due to the strong pace of exports. Still, larger world carryouts seemed to exacerbate weakness from the unwinding of spreads with corn and wheat that was pressuring beans headed into the report's release. Inability to take out resistance at $15 this week apparently caused some traders to toss in the towel. Beans have layers of support under the market, and a break below $14.66 could trigger selling to all the way down to $14.40. Much likely depends on the news flow out of South America. As I witnessed on the Farm Progress Tour in Brazil last week, the harvest is going full bore in Paraná, the country's number 2 soybean region. Moving a record crop onto the world market won't be easy, however, and rains continue to slow harvest in the big center-west region. Dry conditions also remain a concern in Argentina, though USDA cut production there only a little today. Paul, we recommended selling more inventory at $15, but the market couldn't quite get there. Do you think today's break is just a correction or the beginning of the end?
I think that it is just a correction at this point. It really depends on that news out of South America, as you mentioned. I think when those South American beans fully get into the market, we're going to take a step back and cool off here for a little bit. But we're still short beans. We still don't have an awful lot left here. I was a little surprised that we didn't bump that export number a little, and I think maybe that's part of what the market's pricing today. So it'll be interesting to watch. I still think that $15 bean is out there, but it may be much later in the spring before we get back up there now.
USDA didn't have good news for corn. The agency increased its forecast of ending stocks by 30 million bushels, with weak exports only partly offset by stronger use for sweeteners and starch. Global stocks were also raised by some 200 million bushels, and that figure could go higher once the final tally from South America comes in. Rains are boosting prospects for the second corn crop in Paraná, Brazil's biggest corn-growing region. I saw some double crop corn that was already a foot high last week. Bearish 2013 crop estimates from the Congressional Budget Office added to the pressure on corn this week. While those are just statistical guesses at this point, they showed carryout more than doubling, dropping the average cash price to $4.50 a bushel. That's not far from my own 2013 price projection, though dry conditions on the western corn belt should keep the market intact for a while. March corn dropped to near 1-month lows today, but was trying to rally on spread unwinding after the USDA report. March has support below the market at its 200-day moving average near 704. Paul, do you think we can keep a 7 in firm corn for now? And what should farmers be doing with their marketing plans?
Well, I think that 7 is something that we'd like to keep in front of there. I think if we drop much below that, there's some pent-up demand out there for the feeders and the ethanol side that would push it back up if it goes down below there. So I think there's some strength there on the old crop. If we're still holding old crop, I think that there's some opportunities to sell here, and I'm not sure I'm excited about carrying it out. Doesn't look to me like there's an awful lot of carry out in this market. New crop is a little more interesting. We've recommended already that we have some of that sold, and until I think we get that price through February and put that crop insurance price under there, I'm still hesitant to make a lot of sales on the new crop right now.
Wheat showed the most lift in the wake of the USDA report, getting a boost from both the numbers and unwinding of spreads with soybeans. USDA lowered its forecast of ending stocks by 25 million bushels due to increased feed usage, arguing that cheaper cash wheat made it more competitive with corn. USDA made no changes to its forecast for exports, which still look too high to me unless business begins to pick up appreciably. Still, concerns about the hard red winter wheat crop don't look like they'll go away soon. Crop ratings put out by key states over the past 2 weeks showed more declines, trimming almost 35 million bushels off production potential. Forecasts are beginning to hint at a little more moisture, but the key word there is little. Wheat is trying to break out of the downtrend that's kept prices in check since November. Paul, do you think it's time for this market to finally show some legs?
I'd sure like to see it show some legs. I think there is some opportunities out there, but the weather is really giving us some fits. There is that looks like some moisture coming, and every time it looks like moisture's coming, this winter wheat market kind of takes a step back, and so it'll be interesting to see. Some of the local weather guys are saying we're setting up for a series of storms. It'll really depend on how fast those storms move across the plains as to whether or not we get any significant moisture out of that. But right now, it's kind of tough to put any strength into the wheat market the way things look today.
Well, thanks, Paul. China takes next week off for Lunar New Year, but we'll be hard at work. Look for us then on the next edition of The Buzz.